Hey everybody, great to have you back. Good to be with you for Market and Sectors. My name is Mike Fairbourn. Looking today at maybe a buildup in volatility. What could that mean for the broader markets? What's next? Let's take a look at what some of the indicators are showing us. In addition to that, I do have a little bit of a bonus for you today. I did want to take a look at the dogs of the Dow. So that's an approach that's used by a number of investors, and you get it at the first of the year where you're looking at the highest yielding stocks on the last day of the year. That would be the last day of 2024. I want to take a look at that. Some of those have had historical performances that have been better than the market, particularly when you combine the Dow, the performance of the underlying stock plus the dividends received on those, because they did have the highest dividend yield. So I wanted to tap into that a little bit too. It's kind of a broad market guide along with it, but hope you're doing all well. Here I'm joined in the chat by my good friend, colleague Connie Hill. And appreciate Connie being here. And I don't know if Connie's going to be in here every time. I hope so. That'd be fantastic to have Connie on board. Very knowledgeable. Encourage you to take a look at what Connie's got. She's got a great class on Monday still. Correct me if I'm wrong, Connie, on ETFs. It's the only class we have on ETFs. So it's kind of one of those coveted classes that we can't record it. So I encourage you to take a look at that. By the way, you can follow Connie and I on X. My handle, Mike Fairbourn CS, and Connie Hill CS. So with all that being said, let's get started. Information here is provided for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for education purposes only. Investing does involve risk, including for some products more than your initial investment. Now, futures and futures options trading does involve substantial risk. It's not simple for all investors. Please read the risk disclosure statement for futures and futures options listed there prior to trading futures products. Some additional notes there. And finally, wanted to show that the Schwab equity ratings and general buy, hold, sell guidance are not personal recommendations. Now, past performance is no guarantee of future results. I wanted to note just briefly at the bottom, because we do tap into it from time to time, and that is historical data should not be used alone when making investment decisions. The STAX is not a tradable index. In fact, the STAX should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. But we will be taking a look at that in just a moment, I should say, as we take a look, because we did get the new ratings coming out. We get those at the beginning of each month, pretty much the first week of each month. All right. Well, with that, here is a look at the markets here. So S&P 500 index. And folks, I wanted to point this out to you. I'm going to kind of zoom in a little bit here on this time frame specifically. And yeah, we're just seeing that big downward move. That's the interest rate cut. And we said that the interest rate cut. The real big thing is normally that's kind of generally seen as a bullish indication of the market. But the interest rate cut, the Fed did announce for 2025 and 2026 two interest rate cuts, not four interest rate cuts for each. So what is that? That's, a total of four less interest rate cuts, two for 2025 and two for 2026 were the expectations, as you could see there. So it was a bigger dip, right? But that's what's interesting about that dip is it was still counter to the upward long-term trajectory of the trend, higher highs, higher lows. With that as well, let's go ahead and draw it using Thinkorswim lines over here on the right-hand side. You can see down here, I'm just in the bottom corner of the screen. I'm going to click on my diagonal line, and we're going to take a look at that. I'm going to draw in here and ask you all, because I know you guys are very good at this. I'm drawing off the bodies of the candle here. What is this pattern looking like to you? What do we see here when we get higher lows and lower highs over a period of time? And that would be actually after consolidation. Anything else you guys are seeing there? By the way, Chris brings up an interesting point. RSI divergence for sure, as you can see down here as well. And I would say that it's the RSI is actually showing the same thing there, Chris. You look at this, we draw a line on the RSI. Let's pull it up. And sometimes the RSI can be earlier to the party. It's more sensitive, right, to closing prices. Percentage over the last 14 bars right over here to percentage prices. So that's an interesting point. And it could break early. And a lot of times that's what will happen. When it breaks, it might go one way or the other, but you guys nailed it. Exactly right. Daniel, symmetrical triangle, Chris, Jay Richardson, David. You guys got it. That's exactly Jay. By the way, BJ's got it, and AJ, it is congestion, right? It's a sideways channel. Sometimes what they'll call this after a big move up, and well, I guess we could call this a big move up because it clearly is. But I was even thinking, even on a shorter term basis, that's a fairly sizable run. And what did we get? We got a consolidation. A lot of times, what they'll call that is not a flag pattern, but they'll refer to it as a pennant pattern, which is it's like the first cousin. It's a first cousin of the flag pattern because it is very much the same, but you're oftentimes getting that triangle or that sideways range in there. So it's a little bit of a symmetrical triangle that you're going to get with a pennant as opposed to a flag, but generally it can be very similar. Now, the interesting thing about this is oftentimes the break will occur historically, and traders will look for this to the upside because it's going to go in the direction. That's the direction of the trend. And that direction of the trend is not just what you're seeing here on this zoomed in chart. Let's go ahead and go pull it back. Okay, let's pull it back some more. What is that trend? The trend's a little bit, there's a 2-year trend. How many times have we gone into a consolidation and gone up? Well, ultimately, we have continued to go up. So there's been a fair number of consolidations we've seen here where prices have continued to go higher. Now, that is oftentimes where the probabilities will stand through the mind of a trader or investor. They say if trend is up, the trend is higher. It's important enough to spell it out. Trend is higher. Well, then you get these price patterns. They oftentimes will break in the direction of the trend. So the anticipation could be a break higher. And let's tie that into what Daniel said here Chris said down below. Could the RSI give us an early warning indication or an early sign that it's breaking higher or lower here? That could be of interest. Now we possibly have, and one of the reasons why we are in a symmetrical triangle is there could be some actual headwinds in the market that we want to address today, for sure, as we go through this. By the way, I want to talk about this too, just right off the cuff here, and that is economic data came out yesterday for the ISM. So the ISM numbers came out. So let's just punch this in here. ISM came in at 64.4, which is the highest since February 2023. So there is some price, and that's the ISM prices. I actually sent a tweet out on this, but as you saw that's an indication of maybe a little bit more concern about the possibility of inflation kicking in again. What did the Fed just do? The Fed just, as we mentioned it right there, that big gigantic bar. In fact, it's the biggest, I think, bar that we're seeing here. That was the Fed cut right there that we pointed out. This is an indication of an inflationary pressure. Now, it's showing, somewhat there's some strength in the economy is what it is. And we talked about the interest rate cuts. The market didn't interpret that bullishly. In fact, we saw what happened yesterday, and this was actually right after that news came out. It dipped. It dipped lower, and that was a fairly big bar, but we didn't close below that lower channel line. So we're still holding there, and maybe that long-term trend could help to facilitate some strength to the upside. It remains to be seen, but what I wanted to point out is we want to kind of take a look and just see what the markets are telling us in terms of the technicals. So it's interesting on one side, and this is one way to kind of dissect what's happening in the economy. You get all the news, you gather it together, and then you wait and see, what do the technicals do? Are they going to follow through to the downside or the upside? Because here's the thing. If we followed through to the downside and we broke lower, well, that's going to be clearly a lower low. And we'll have a lower high up here. And that's the makings of the beginning of a change in trend. Then we could start watching for some moving averages out there too, to see if it breaks a longer term moving average of 100 to 200. Because if you're seeing that at the top, well, there could be a little bit of room to go down, but we haven't seen that. In fact, despite that news yesterday, we still went sideways. And that's really been, this has been such a resilient trend, actually. Look at that. Just incredibly resilient. But you still take the news and then you put it in place, and then you say, well, what happens with the technicals? Do the technicals hold up or not? But I would just say, speaking of that, that's a key support level. If we take a look at the NDX here too. Next, speaking of market specifically still, the NDX a little bit sideways. In fact, look at this. We may have I'm just going to put some lines in here. I have a feeling somebody's going to jump out, throw in the chat what they might be seeing here in terms of a pattern. But it's on the inverted side, but that could be construed as a dot, 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 which is also known as a head and shoulders inverted pattern. And this can be positive too. And in fact, these can be actually pretty big moves if in fact it is a head and shoulders, inverted head and shoulders pattern. Okay. Let me give you the standard price projection of a head and shoulders pattern on an inverted basis. So I'm just going to write that out again so you see it. So that would be the shoulder, the head, which is lower, and the shoulder. I'm going to put a question mark because we don't know. And how do we know if it's head and shoulders pattern? How do we know more if it's head and shoulders pattern? We know more. We don't ultimately know until the head and shoulders pattern is done. But we do know it could be getting close if you take out the neckline right there. Now that's the neckline. I got a lot of lines. I'll tell you what. I'm going to change this color because we've got a lot of golds in there. Let's just call blue. Does blue go? Okay, there it is. So that's the neckline. Now the price projection, if we take this out and the inverted head and shoulders pattern does unfold, is going to be, oftentimes you're going to get the move down here. At least this is a minimum. It doesn't have to, it could go higher. It doesn't even have to do this, but it could go above this level. But let's just say you're getting that price range from high to low here. And then you add that wherever you break out from. Let's say there is a breakout. I'm going to kind of estimate that price. So I'm just taking this price range from the high to the low. Okay, because we're looking at the actual head and shoulders pattern itself. And I apologize, folks. I'm missing. It's this one right there. My apologies. This is the entire head and shoulders pattern. Redraw. I can do that with the click of a button right there. It is the entire one. This is just one end. So yeah, this is a shoulder. That's a head, and that's a shoulder. Perhaps it is, if the whole thing unfolds, right? But we're talking about this move. So it's a little bit bigger than even I suggested previously, which is interesting to note because you take this range on the breakout here, you add that price, which adds a little bit more to it. Not a ton, but I just want to account for a few more points in there. But this price range to equal this price range. And so there could be a target somewhere in there. I'm just eyeballing it. It could be different. It's got to unfold, but something to park in the back of your minds for sure. One thing too, I'll note, what could hold up this right side of the shoulder? I believe there is, if I'm not mistaken, I think there's a moving average. Not that one. I'm looking at, I think it's the 50. Let's make it thicker so we can actually see this. But I think the 50 period moving average has done a really good job of holding up. Okay, I got to actually show the study. Otherwise, we'll just be going in circles all day. There we go. So see what I mean? You've got the 50 here. Now, the last time we came down to the 50 period moving average, boom, right there. Okay, clearly right there. And again, how many times did we hit it? The body of the candle. Body of the candle. We touched off the bottom today. All else equal, that could be a positive. That could show us some more indications of support at that level. So that could be a potential, indication there too. The other thing too, just big picture, and this is always helpful for me. Literally, I've done this before. I've done it so much, but I mean, you just got to kind of take everything off the screen, sort of look back at it and say, fine, well, are there any key support and resistance levels at that level? We know a 50 period moving average had a tendency on this trend specifically to give us a couple of touch points. 1, 2, 3, 4, 50 period right up here. We know that, but if I take this off and I kind of zoom out a little bit, or zoom in, we'll flip colors. Look at this right here. That was a major high. At one time, that was the high. That was the 52-week new high there. Draw a line right through there. 21,000. So it's holding that level, maybe within an inverted head and shoulders pattern. Question mark. But now you know what to look for, right? And you can see. And I'm going to go back to the RSI again because these indicators can be helpful for early indications of a change. And just what you're looking for here is maybe the RSI does take out a trend line. Maybe the RSI just takes out a prior high here and gets above 50. Because remember the RSI read of greater than 50, sorry, I got a minus sign in there. Greater than 50 is considered to be bullish. Greater than 50. And where are we at? Well, we're at 47 and change. And so we're getting very close to that level. A break above this range right here could trigger this move. And also, of course, you've got this downward sloping trend line that would map out our possible inverted head and shoulders pattern. So there are a few things going on with this, no doubt about it. So we're going to talk about some of the kind of the bullish indications and bearish indications as we go into this. But before we go any further, I'm leading up to one thing, and there could be like a crescendo event here coming at these key support levels. Do we bounce off here, or do we break lower? Okay, and if we break lower, then we could trend down further too. One of the things I wanted to focus in on today was the volatility creeping higher, and I wanted to really hit this because I think it's a key point. And you'll see this volatility. It really began with that rate cut over here. I'm going to use the ATR to help us out a little bit. ATR. Oh, by the way, let's see. Isaiah says, is that a falling wedge? I would look at it more as a sort of a symmetrical triangle pennant, the pattern for the SPX specifically. I would do that. Welcome, Dragon Rider, and all. No worries. Okay, yeah, that was a short-term head and shoulders pattern, Chris. You got it. Yep, we were looking at that. Exactly. Okay. I mean, I should say it could be, right? It's got the formation of it right now, but it's got to break higher to confirm it. So, all right. Well, I'm going to take a look at the ATR here, another indicator built by Wells Wilder in 1978, and it looks at the true range of I put it right down here, the true range of the stock. But this gives us an average of the true range. And so what that tells us, and you can see it spike up higher here, and it's continuing to climb. That's the key thing. It wasn't just that we saw this big move in the markets on the Fed cut. It's that it continues to rise over here. And what's happening is it is looking at the last 14 days. Let me just dissect this indicator a little bit behind the scenes. And so, first of all, it's an average of the true range, and that's the TR in there. The true range is simply just the range of the day. What is the true range of the day? That's right over here, actually. You've got the range. The range of the day today is 53 points. And what that looks at is the high to the low. What is that range in price? That, in fact, folks, is the true range. When we go back 14 days, which is the default for the indicator, we're averaging it out over there, and it just stands to reason. If we are getting larger moves from high to low on the day, over time, that ATR is going to tick higher. And what does that mean? Well, it can mean that we're gearing up for a bigger move sometimes. And this will happen. Let me show it to you. Right over here. Look at this. Actually, we don't have to go back too far. This is a good example. You can see over here that the ATR was kind of moving up. And a lot of times when the volatility, here's the key thing. When it gets low, and this is a really cool indicator. If you don't track it, you won't know. But let me show you this. Let's draw a line through there. Look at these lows. Key lows for sure. 1, 2, 3 at least from what we can visually see here. I could scroll back and find some more. But when we were hitting these lows on that ATR, when volatility gets a little bit lighter, look what tends to happen. Let's just draw some lines going up here. So I'm going to draw this up here. It can be an early warning indication of the possibility of a move, and a move to, in this case, to the downside. Now, did we get it over here too? We did. What's happening is you're getting strength of the trend over here, but then look at my line. It gets lighter and smaller and smaller and smaller. Kind of like, you throw a ball up into the air. Gravitational forces will start to curve that over. And I guess if you're throwing it out, then it would out and up, then it would start to come back down, and you could see that happening. But this can be a really, really cool indicator to keep an eye on as, there we go, right there, as the ATRs become really, really quite small. Where does that happen to be on the SPX? SPX happens to be on this 1 year, and I like using a 1 year piece of data as opposed to going back too far because it's more of a reflection of the current market, about 40 on the low end, very close to 40. I just covered it up. There's 40 right there. Okay. You get close to it. Now the other side is when you run up a little bit and then that ATR starts to curve around, or over here, curve around a little bit. Look at the other end. You get the rally back up to the upside. Okay. So could we you know, do one of these when we curved over here? And if we start to curve over here, could we start to break above that line? A lot of times you can get the early indication from the price data, right? Because remember, and James made a good point of this, and I'm sure Connie has had many discussions on this. James talked about it yesterday specifically, but he said, you know, all the indicators are getting fed from price data itself. And so, actually an ATR can do a pretty good job because it's looking actually at price data. And not all the indicators. This one's actually a little bit clearer, but like moving averages, RSI, but this one can be a little bit more sensitive to it. So watch that turn, and sometimes that turn lower can be an indication that we're starting to get going back up again, just because, you just don't have the amount of volatility to the upside as you do to the downside. It's been said that markets will tend to take the stairs up and the window down. And the ATR kind of gives you a visual of that sometimes, right? But when I say the window down, actually, that means, let's see, stairs up, I've heard the elevator down, I've heard the window down. It goes a little bit faster, and you start to see that pick up. But could this still begin to, we talked about it going down. So if the ATR goes down, that could be construed by some traders as a positive. But what if it goes up? What does that mean? Notice we kept climbing. Well, that's why I said, we did not hold that support level, and we really ramped up over here quite a bit. In fact, if we're using the same ATRs in the market, you see that key support level right there, which is kind of a similar move from this top to this top. Look over here with me. This top to this bottom. See the same range in price? Okay, let's do this. Let's go down and just see where that was at. And it actually went a little bit further. If I'm using the very end of it, it's about right there. We're very, very close. So if I use the end of this run right there where that support was, pull it down, and now I pull this across here, we're pretty much at that same level. Do we hold the support? Do we round over? Or do we dip and that starts to break higher? ATR can help give us an early warning sign as well. So that's another indicator. This is one that can track really, really close, because a big move there, 14 bars, you're still going to see that move oftentimes, right on that ATR, even though it's an average. If you wanted to, just look for bigger bars too. If you see a big bar coming down here, kind of like that bar there or that bar there, yeah, it might have a little bit more room to go. But yeah, a lot to be, to kind of see on this going forward. All right. Well, that's ATR, and I wanted to really kind of address that because I think that's an interesting one. It has been spiking since really mid-December, that announcement. Okay, a couple more things to look at. I did want to take a look at, I mentioned this. Oh, you know what? And one key thing, and we're going to get into our breakdown here of the market. In fact, let's start with that, and then we'll go in, and I'm going to take another kind of a route when we talk about market breadth that you may find interesting here as well. But looking at the S&P 500 index, and by the way, let me just take a quick look at any questions that might be coming through. So ATR reflects volatility to some extent. Exactly, it does. Yeah, it's a volatility adjusted indicator, Isaiah. And that's why some traders will use it for potential exit levels on a stock. When they might want to try to get out, they might be using that level as their guide for the volatility of what the stock's been doing. In this case, we're looking at the index, but yeah, what the stock could be doing as well. All right. So a couple things with the breadth and the market itself. By the way, you notice over here, we did something interesting. We broke below the 100, and this is the McClellan oscillator. for the NYSE. So a larger basket of stocks here, about 2,800 and change. And then we went above the minus 70. So we went below the minus 100. And then we went above the minus 70. And what McClellan will tell us is about a 2 to 3 week rally you can expect up or down. And that can happen on the upside too. But this is a minus 70, so you're coming off the bottom. The last one we got was right about here. And so that kind of gives an indication that, well, it doesn't have to be up, but that 2 to 3 week rally, 2 to 3 week rally, it could be more, could be less, but that's what McClellan says, McClellan oscillator. That would account for a move to the upside if that were to unfold. That's interesting. We saw that. One thing we can say is the summation index has dipped pretty substantially right there. That has gone down, right? Quite a bit, and we're still waiting for it to turn back up. So that's not a positive. That would be more of a negative. And partly, a lot of that is this sideways range over here, and then kind of dipping and holding a little bit flat as well. Now, as we scoot on down, let's look at, and I'll back this out a little bit. Here is the average decline for the NYSE. And so we're looking at the NYA for that specifically. But you can see, do you get more decliners? Any one of these could be a trigger to send us up or send us down on an early sort of an indication. And now we've got a whole new set of lines. We have kind of a possibility on the SPX in here. It is too kind of like an inverted head and shoulders pattern. I would say it's kind of more like a symmetrical triangle. NDX a little bit more along the inverted head and shoulders pattern line. But look over here with me, this high right there and this low. If you break the AD line going lower, that could be obviously construed as a negative or a positive over here. Now, what has been leading the markets higher have been like the Magnificent Seven. Now, I created this just for you guys today to take a look at. I'm going to go over here just a regular kind of a chart and highlight this. So, and you guys, I don't know if you knew this, but you can create your own sort of mini, it's sort of like a mini industry, sort of, because it's a combined grouping of all those stocks. So do you want to see what the Magnificent Seven looks like? Just go right over here and click on, this is individually all of them, and it puts them all together. So it adds all 7 of them up, and then that's what it looks like. Now, this has been and was a key part of keeping prices higher on the year, last year. Now, will it begin to also break higher? This looks even more clear in terms of an possible inverted head and shoulders pattern. Can it take out the downward sloping trend line, which is how they mirror that? Can it extend higher? Could easily draw that here. But watching this as just those 7 companies could be also another early indication as well. If we look over here at the money flow was outstanding over here. Now it's come back down a little bit. The collective volume, because it does look at the collective volume as well. Collective volume has dipped, and you can see that's gone to a sideways move, but kind of holding up here right now. Now, the last thing I want to show you with this is, since we have this, and I'm talking about money flow, which takes a look at volume, let's just see here too if there are any interesting indications on the Mag 7 specifically as it relates to the volume profile. Pull it up, volume profile. So now we're going to take a look at all this volume, and we're going to throw the volume profile on here, and I'm going to adjust this down to 10, which is just going to show us where the value area percent is, where the biggest amount of volume's coming in at. But now you've got the Mag 7 here to look at. Now, I brought this up because there is something of key significance to note. Let's go to a 6-month chart. Okay, so on the volume here, what this does is it takes the collection of all of these, all the volume across the board on these, and it adds them together, and it plots them out here to the right. So it tells us, hey, at what price levels collectively were people placing trades on the Mag 7 over the past 6 months, more relevant time frame. You're going to get something on a daily chart that's similar, but just keep that in mind in terms of 6 months just gives us a narrower range, which probably makes more sense to us. And the way to look at this is, and by the way, This is that value area percent. That's the top 10% of volume came in right there. That red line in there, that's referred to as the point of control. That is the highest volume. It came right at that level. But you got a lot of volume there. This is referred to as a volume node. And where you get the volume nodes, if prices are above the node or below the node, it can either act as support or resistance, depending upon where price is at relative to that node. You can see right here where we're at, prices are clearly above it. I would point this out. I would say here's a spike here. There's a spike here. This is the biggest spike for sure. And there's another spike over here that's pretty big. When you get a range where it dips, that means there's not a lot of volume there and there were not a lot of trades that took place. And this range is an area where prices can fall pretty quickly. Pretty quickly. I didn't mean to shoot that up. It's a little bit lower. I think it kind of builds up about right there. Can I just take that portion out? I believe I can. Yes. Oh, not that one. All right, forget it. I got a little click happy. There we go. Let's pull this one up here. So right there and there. There's not a lot of volume in here. It's very, very low. And so prices can move very, very quickly through there. What we were just talking about, looking at the market, if the Mag 7 we're looking at, Magnificent 7 as it's referred to, just a basket of those companies, right? The Mag 7, if in fact it begins to break lower here, it might trigger the market to dip as well. So watch this. In other words, this inverted head and shoulders pattern has a lot of significance to it, right? Just as I brought up earlier from the get-go, key supports reside right in there. It's a key support level. Will that pattern unfold with the trend, which lots of what traders will say a lot of times, hey, the probability is it goes higher, but in case it doesn't, be mindful of it. By the way, this is a lot of letters to type in. I'm just going to see if I can post this down below. There you go. Look at that. Plug that symbol in. Oh, I thought for a second I did two of the same. Good. I thought I saw Microsoft and Meta. That would not be the Magnificent 7. If I added something twice in there, that should be the Magnificent 7. So you can just copy that, paste it, or you can type them all out. But it's just a cool little feature of Thinkorswim that you'd otherwise not ever be able to see. And all we did was we leveraged that up, so to speak. We just wanted to see what else we could do with the Magnificent 7 once we got it on the chart. And that is to put in a volume profile and just to try to confirm, hey, where are some of those levels? By the way, one last thing. If you do break above, look at the trend. If you break above that trend line that we talked about right there, what happens to the volume? It starts to diminish. So for the upside, if that unfolds, we don't have a lot of trading activity. And according to the volume profile, prices could move fairly quickly as well to maybe that target range that we talked about. Again, this is collectively the Mag 7. But I'm just going to draw it just in case. Maybe whatever that price is over there, maybe somewhere north of 2,500. If that inverted head and shoulders pattern hits just its kind of standard number. All right. Yeah. By the way, yeah, it takes a little while to plug that in, doesn't it? A little bit of time. But it's a cool little comparison you can put on that. Take a look at it. By the way, let's do this. Where's the key support level coming in at? Well, there's a support right there. So we got to highlight that. That's support. And by the way, that'd be the biggest support of all. So if prices do drop, let's just clear that off real quick. If prices do dip right through here, there could be some support. And of course, right through there, and you can see why. There's a big support shelf. Now, it doesn't always add up this way. Sometimes you get I've seen this before, where you're going to get horizontal support, but there is no volume profile, and it just breaks the support. In this case, these seem to be kind of fortified by a lot of volume. All right. Well, let's continue. A lot to look at here still with the time we got remaining. And I want to do this. Oh, yeah. Let's pull up our stacks. So this is the stacks, the Schwab Trading Activity Index Summary. We talk about it each and every week. How do the stacks do? And you can read more about the stacks down below. There's some great information on it down here, right down here. I'm going to plug this in just into the chat in case you guys haven't used this, but it does look at existing positions and trading activity amongst accounts here. And that way you guys could take a look at it. But you'll notice that it did go higher. One key thing I wanted to note, so we are getting an indication of more buying, and there was a little bit of a jump there into December. But the one key thing, what's the big word we've been talking about? The divergence word. It's been brought up a few times. Look at the divergence. That's a high in terms of the Schwab, but look where we're at now. It's a negative divergence. In other words, if the Schwab gives us an indication, we don't know if it will, but if you're just looking at it, it says that there's not as much strength up here. You got higher points over here. That's a higher high than here, but that is a lower high. So that's negative divergence using the Schwab, the STAX, Schwab Trading Activity Index, this referred to as the STAX. All right. It's great to have, and sometimes it'll strengthen with the market. But there you have it. All right. Wanted to take a look at that. Also, a key point to note with the markets. Now, if you guys have been looking at, let's go back over to it here. The inverted yield curve, another piece of important information. Look at the I should say the yield curve. I'm sorry. It has uninverted above the zero line, and now the longer term rates are outpacing the shorter term rates. And you see that right there. Look at the 10-year. The 10-year is all the way back to where we were back last year at these high levels. Okay. Now, I'm going to show you this, and we've used this before under economic data under Fred. And I'm going to go to the home, and then we'll go to this. But I just wanted to quickly note that this product uses Fred API. And it's not endorsed or certified by the Federal Reserve Bank of St. Louis, nor is it by Charles Schwab. So just a quick note over here. If we go to the 10 2-year, this is our yield curve. And you'll notice what happens when you start to go above that level. So this is really quite big picture. This doesn't have to happen, but generally speaking, when that 10-year starts to outpace the 2-year, in other words, we start to do this. We start to go high. I'm going to switch colors. We start to go higher here. What do we get? Take a look. These grayed out areas are recessions going back to 1979. Do you notice something interesting here? Every time that we uninvert, that means we went below zero. That's an inverted yield curve where the short-term rates outpace the long-term. And then the long-term outpaced the short-term. Every time we shot up, we got a recession. We come back down, we uninverted. Notice the yield curve going higher. Notice the yield curve going higher, higher. Uninverted, below the zero line, higher. Here we are again. We went below, we're going higher. So some would say, looking over the past, well, at least over the time frame we're looking at, that's 1, 2, 3, 4, 5 times that we went up above there, with the exception of that little dip right there. There was another little dip right there. But notice when it held down a little bit longer and started to go higher, that's more indicative of a slowing of the economy, recession. Now, we're seeing strength in economic numbers, but will inflation come back? The Fed just cut rates. Are they behind the curve? These are big picture questions, right? And these, by the way, this is a long period of time. These are like years in here, but it's still showing that. And I wanted to highlight that just so everybody is aware of the uninversion of the yield curve and the 10-year really pushing you just substantially higher. Look at that. I mean, if we start to break these highs, yeah, I mean, it could shoot up even higher. And so there can be recessionary pressure. Again, you can get that if you want to look at that just on the Analyze tab. I'm going to highlight this so folks, you have it here. Let me pop it down below. And that is the symbol you need to type in for it. But you can find a lot of that just right under the home. Click on home and there's a lot of great data in there to take a look at. All right, so we got that down, folks. We went through a few things today. Let's see. Wrong one. There we go. Let's come over here. I'm going to go back and just highlight some key levels real quick, and we'll wrap it up with the dogs of the Dow, which I promised we'd look at. This is a big picture way to look at the markets as well. SPXEW, breaking lower. I sent a tweet out on this as well. This broke some longer term moving averages. The SPX did not. The NYA still went above the minus 70 as it went below the minus 100. We did not get any additional omen spikes. We did not get a number of new lows in the market, but we always flip this to a weekly chart to see what we've got. We have just this one here. Now, I'd anticipate if we break lower, we might get some stocks hitting new lows and we might get some additional spikes, but the trend is still up, right? The trend is still higher. All right. We did not get a push yet. We haven't broken above any trend lines for an inverted head and shoulders pattern, but you can see over here, we were clearing when we kept getting higher. We're going above the 250 level for new highs in the NYSE. We're just kind of still staying down here at a low level, which is okay because we've been down here before. But if we break out, we may want to see a number of new highs in the market too for the trend to continue. So we'll go through that. There is seasonality the first of the year, and you can see traditionally this is working in our favor if it unfolds. But look over here with me. See the spike going higher on a 10-year basis? We tend to run up to February. If you take out, this pullback here, what you'd be looking at actually is you take out COVID, and a lot of times you run up to mid-March. So it's one time, it's sometimes the strongest part of the year. Okay, well, to wrap it up, folks, I wanted to hit one last thing, and that is the dogs of the Dow that I promised, and that is, again, an approach to look at the markets, and we're going to go over here to it. I'm going to pull up the Dow here for us. Where are you, Dow? You're in here in our public. There we go, Dow Jones Industrial Average. And what I'm going to do is I'm just going to scoot on over the yield. And what you do is you take the top 10 yielders with the highest yield at the last day of the year. Last day of the year, and those are the dogs of the Dow. And let me just tell you what those were so you can have them, but they line up pretty good with where we're at. It lines up thus far. You got Verizon, CVX, Amgen, J&J, and Merck, all dogs of the Dow. Those are the top 5. The next one's Coca-Cola, IBM, Cisco, McDonald's, and then Procter & Gamble. They switch spots, but still, those top 10 right there, as you can see them, those are the dogs of the Dow. For 2025, there have been some historical indications that the dogs of the Dow will outperform the Dow. Let's put those 10. I just want to make sure you have them, but they still line up as the 10. Oh, right there. Dogs of the Dow, DOD, for short, for 2025. And when you combine price action with the higher yields, they have performed over different years, not every year, but there have been some reports out there. You'll have to take a look at those where it does show that the dogs of the Dow had some good performance results. Again, that's not every year, but on average, some traders will look for that. So keep that in mind, but that's something you might want to investigate. I wanted to highlight that because these can be fun. One of the reasons is why they can go higher towards the end of the year, or they just have better performances, because you might be looking at a basket of companies that are they've been around for a while. In that sense, they're established. And when the prices get low, they oftentimes will come back and go higher. They might recover, but in the meantime, you're getting the higher yield. Again, this is with dividend paying stocks, there is the possibility of a dividend cut, right? With any dividend paying companies. Some of these, though, many of these I think are dividend aristocrats. They've been raising for 25 plus years, but that's something you'd want to look into. That is a possibility too, but a lot of times those Dow stocks, some investors are more confident that they'll hold on to their dividend because they've had a history of doing so. That might not be everyone. You want to look into that, folks. But I'll leave it there because time is up. It has been nice being with you, and I look forward to discussions about the market and sector analysis going forward. More on the sector next week for sure. Take care.